Right. So, good evening, everyone. Uh, Today, I thought of starting the incomplete records. So, incomplete records chapter, there are two parts. Right. In the incomplete records chapter, there are two parts. Can you hear me? Yes. Okay. Thanks. So, one part is calculating the profit in a business. Calculating the profit. If now, incomplete record means not keeping proper records. There are businesses, right? There are small scale businesses. Most of the times, they don't keep proper set of books. They don't keep proper set of books. So if there is a situation like that, you know the main objective of the business is to earn profits. The main objective of a business is to earn profits. Right? So if they don't maintain proper set of books, like no documents, no books, they can't find out the profit. It's very difficult, right? So practically, I have been working in many companies, and I have been, doing some bookkeeping, auditing, uh, things like that. So there are businesses, if they don't have the books, if they don't have the documents, then it's very difficult to find the profits. But there are methods to calculate the profits. So under incomplete records, we will be doing calculating the profit as the first step. Then there is the second step where we will prepare a complete set of books using whatever the information available. Right? So remember, there are two parts. Right? Number one, calculating the profit. Number two, preparation of financial statements. That means the income statement and the statement of financial position. Preparation, a complete set of financial statements. So today I'm going to discuss the profit calculation part. In the next session, I will discuss the financial statement part. Right. So basic terms, we need to know the equity, what is equity, and how the equity is changing. Equity will be changed, and either equity can increase or decrease. Equity increase, there are two reasons, two main reasons for the increase of equity, right? And there are two reasons for the decrease of the equity. Equity increases because of the additional capital or due to the income. Equity will increase either due to the additional capital or due to the income, earning income. And equity will decrease because of the drawings, owner takes the money or goods, or due to the expenditure. And if you take the income and expenses, that is called the profit or loss. Income minus expenses will be profit or loss. Right, so these are the basic terms. Then we'll understand what is meant by incomplete records. So incomplete records refers to situation in which an organization is not using double entry bookkeeping, no double entry bookkeeping. Instead, it is using a more informal accounting system. So not a formal accounting system, it's an informal accounting system, such as single entry system, to maintain a reduced amount of information about its financial results. So they don't keep a complete set of books, and they just have a single entry. When they receive cash, they will record in the cash receipt. Payments, they record in the payment. Right? No double entries, no ledger accounts, nothing, no trial balance. It's only recording a single entry. Right? So the incomplete, as I said, incomplete records, there are two parts. One is identification of profit. Then identification of individual account balances within financial statements. Right? So we prepare the financial statements. So when it comes to identification of profit, method that we use is the accounting equation. Then preparation of financial statement, we can use the ledger accounts and some of the ratios. Right? So to know, to do the questions in incomplete records. So if you want to do the questions in incomplete records, you need to know some important things. One is calculating the capital. How do you calculate the capital? Capital is equals to asset minus liabilities. Asset minus liability is capital. So you need to know how to calculate the opening capital. Then we need to know use of ledger total accounts to calculate missing figures. Like for an example, if the debtors, some of the debtor balances are given, you can find the missing entries like we did in the control accounts, debtors control account and creditors control account. And let's say if they have not given the credit sales amount, using the other information, you can find out missing information, right? Then use of cash and bank summaries, use of given profit percentage to calculate missing figures. So I will be explaining this during the session. So before I move on to the next part, can you all do this question? Right? This is a very simple question. Already you know, you have this knowledge. Already you have this knowledge. Can you all find out the profit for the year ended 31st March 2015? Moon Lanka Traders, opening capital, additional capital, liabilities, total asset. So here is the equation to calculate the profit. So you do this in the accounting equation chapter. Profit equals closing net asset minus opening net assets plus drawings minus additional capital. Okay, I'll give 2 minutes. Tell me the answer for this. Right. So let's try to calculate the answer. Closing net asset is, how do you calculate the closing net asset? It's assets minus liabilities. So you need to know how to calculate the assets, how to calculate the capital, right? Then the opening net asset means the opening capital 750,000. Plus drawings, there is no drawings, but the additional capital is 50. Then the answer, 987 minus 75 is 912, minus 750 minus 50 is 112,000. So answer is 112,000. So if anyone is having a doubt, let me know. So this is a very basic question. Calculate the profit. Now let's say there is a business. So in this business, they have not maintained proper set of books. No accounts are maintained. Right? You are the accountant. So they come and tell you, Mr. or Mrs. or Miss, whatever, can you prepare the accounts? Can you find out my profit? How much is my profit for the year? Right? So if profit equals income minus expense. So if you want to find out the profit, you need to know all the income from the starting date, 1st of, let's say, April to 31st March, 1 year income, everyday income. Let's say this is a restaurant. So in this restaurant, there will be daily sales. So you need to know daily sales values. And some days there will be 10, 15 sales. Some days there will be 200, 300, 500 sales. So you can't find everything. It's very difficult. Therefore, what you can do is, the simple way is, you go on 1st of April to the business. 1st of April, you go to the business and see what are the assets available in the business. So simply we do a stock count. You can do a stock count and find out the assets and ask the owner what are the liabilities, right? So you go on 1st of April, opening, the beginning date, and find out the assets and liabilities, then calculate the opening capital balance. Then again you go on end of the year, 31st April, 31st March, 31st March, right? End of the year you go there and see the assets and liabilities, calculate the closing net asset. It's only 1 day task, right? Then you can ask for drawings and additional capital invested by the owner. By using this equation, we can easily calculate the profits, right? So that is the simplest method to calculate the profit in an incomplete records, in a business which doesn't maintain a proper books. Okay, so we'll move on to another example. We'll do these questions fast because I want to explain a very important concept on profit margin and markup. Okay, can you all tell me the answer for this example 2? The following information was extracted from the books of Rose Traders for the year ended 31st March 2018. Capital as at 1st of April, 500,000. Profit is given, 175,000. Liabilities, 425. Drawings, 25. Based on the above information, calculate the value of total assets as at 31st March. So they are asking the year end total assets. That is the answer. Right. So shall we check the answer? Um, I got 2 answers. How about others? Right. Uh, there are different answers. There's a minus answer as well. Okay, let's check the answer. Now the profit is given 175. Profit is 175. Closing net assets. Closing net asset is not given, but we have only the liabilities. Okay. Right. Net asset means asset minus liabilities. Liabilities are 425,000. So we can take the asset as X. X minus liabilities 425. Opening is 500 plus drawings during the year is 25 minus there is no additional capital. Now you need to solve this for X. So how do you solve this for X? Here we have X. So if you add all this, Means minus 425 minus 500 plus 25 is minus 900. Minus 900. So this side we have 175 equals. Then the answer is x is equals to 175 plus 900. That means 1070. So x equals 1075. Therefore, x equals 1075. X means total assets. As at 31st March 2000, total assets. Opening net asset means that is opening capital. Capital as at first of April. That's the opening net asset. There was a question, but why opening asset is net asset is 500. Opening net asset. Net asset means capital. Here is the capital. Right? Is it clear? So answer is 1075. $900 is the addition of this addition. You have minus 425 minus 500 plus 25. Addition of this. Any other doubts? Right. Let's do the next question. Example 3. Example 3. The following information was extracted from the books of super traders for the year ended 31st March 2019. Total assets 31st March, capital 1st of April. This is opening capital. Profit, additional capital introduced during the year, drawings made during the year. Based on the above information, calculate the total liabilities. Now, the previous question, we have calculated the total assets of the year. Now we are going to calculate total capital. So can you all tell me how much is the capital? What is the answer? Profit is given. We will write it. Profit equals profit is 150,000. Closing net asset. Now here we have to take the liabilities as X. What is the answer? Okay. Closing net asset is asset minus liabilities. Asset is 950. Liabilities not given. So we take it as X. Opening net asset means opening capital, which is 400. Then drawings 75,000. Additional capital 100,000. If we solve this, we can take X to the opposite side. Then the right side we have 950 minus 400 plus 75 minus 100. 525 minus 150. Then the answer X equals 370. 375 is the answer. So that's example 3. Let me know if you have any questions up to this point. Right. Now let's move on to another question. Let's get this right. Example 5. Example 5. Can you tell me the equation for the profit? Profit equation. What is the equation that represent the profit earned by a business? correct answer is closing capital minus opening capital, right? Year end equity minus beginning of the year equity plus drawings minus new capital introduced. New capital is minus, it's the additional capital. Drawings will be plus. So answer is number 2. Answer is number 2. Right. Now we are moving to another very important section. I'm telling this because important. Most of the students, they have the doubt on markup margin. Markup and margin. Okay. So let's try to understand completely on this markup margin concept. Right. So remember the markup. Markup means the profit is calculated on cost. Margin means the profit is calculated on selling price, on sales. Right? Markup means the gross profit is on cost. Right. So can you write this in your book? Profit calculation. Profit calculation is divided into two, markup and margin. Say the markup is 20%. This is an example. Markup 20% means cost is 100. Profit is 20. Selling price is 120. So cost is 100. Highlight the cost. This is 100. Cost is 100. Okay. And margin means on sales. On sales means sales is 100, profit is 20. Then the cost will be 80. Cost is 80. So here sales is 100. So highlight sales 100. Right? So remember this equation. If the markup or the on cost is given, write this equation, cost plus profit equals sales. Cost is 100. On cost, profit is 20. Margin on selling price, profit is 20. Then the cost will be 80. Cost is 80. Right. Now let's do a question. Example. Example 6. is profit calculation on markup. Profit calculation on markup. Profit calculation on markup. Right. So before I start this, can you all just do the first calculation? Markup is 20%. If the markup is 20%, markup is 20, cost is 5,000. How much is profit? Can you tell me how much is profit? Right. So if they say, I'll give the equation here. If they say markup is 20%, markup means on cost. Cost is 100, profit is 20, sales is 1. Then the cost is 5,000. How much is profit? So this is the equation. Now 100 means 20. How much is 5,000? Take like this. In a simple term, like in grade 5 scholarship exam, they might ask for 100 rupees, if you can get 20 chocolates for 5,000 rupees, how many chocolates can you buy? Right? So what to do is 5,000 20 over 100 into 5,000. Or what you can do is, it says 100 equals 20, 5,000 x, right? Cross multiplication, right? X is equals to 20 over 100 multiplied by 5,000. This is called cross multiplication. X goes to the other side. X here. And 5,000 goes to the other side as multiplication. 100 comes to the other side as division. Okay, now if you solve this, you can get the answer. Thousand. Profit is 1,000. So it's a simple calculation. 1,000 is the profit. Can you do the second one? Markup is 20%. If the sales value is 6,000, how much is the cost? %20 means if the cost is 100, profit is 20, selling price is 120. Now the selling price is given. They ask what is the cost? Cost. Can you all tell me the answer? Right. So let's check this. Okay. Right. Now we have the sales. Sales is 6,000. Now you need to record the sales here. 6,000 under the sales column. If the sales is 6,000, how much is the cost? Now, even without doing this calculation, Now, if you take the previous question, this is similar. This is same thing what we did in the previous question, right? This one. Now here the profit is 1000. We calculated the profit. Then the sales is 6000. So if the sales is 6000, the cost should be 5000. So your answer should be 5000, isn't it? Your answer should be 5000. Right? So it's like this. 100 is equals to 120. 6000 is equals to x. Now cross multiplication. X, we take it to the one side. 100 divide by 120. Because this goes to the other side, division. And multiply by 6000. Right? So if it is on, if the cost is given, you multiply by 20 over 100. If the selling price is given, you divide by 120, multiply by 100 to find out the cost. If you want to find out the profit, you multiply by 20. Okay. If you solve this, answer is 5000. Answer is 5000. Cross multiplication. 5000. Yes, that's correct. So I feel still most of you all have the confusion. Only few has given the correct answer. All others wrong answers. So do the third one. Before I explain, can you tell me how much is the profit? Markup 25%, sales 4000. What is the profit? Use the cross multiplication. Profit, we need the profit. Okay, so markup is 25% means cost is 100, profit is 25, sales is 125. In the sales value, now always first write the markup equation. Markup equation is cost 100, profit 25, sales 125. Right? Then if the sales is 4,000, what is the profit? Okay, now you can solve this equation. 100 means 125. So I explained it. It's 4,000 into 125 into 100. Right? This is what you need to find. This is equals to 4,000 is equals to 125. So divide by 125, multiply by 100. You cross this, multiply by, or if they ask the profit, multiply by 25. Cross multiplication 25. 25%. 25%. Third one is 25%. Okay, so if you multiply this, you are getting the answer as 800, which is profit. So profit is 800, cost is 3,200. Right. Now this is markup. Here I explained the markup. Now the second part, the example 7, I'm going to do the margin. Profit calculation on margin. Profit calculation on margin. Margin is 20% and the sales is 5,000. How much is the profit? Sales is 5,000. They ask the profit. Can you tell me the answer? The same like previous. Now here the same like previous one, but here the margin is given. Earlier one markup. If margin means sales is 100. Out of sales, profit is 20. then the cost will be 80. Sales is 100. Margin is sales 100. Markup is cost 100 on sales. Therefore, sales is equals to 5,000. Then 5,000 divide by 100. They ask the profit. So we multiply by 20, which is 1,000. Which is 1,000. 5,000 divide by 100 multiply by 20. 1,000. Right. Very good. So sales is equals to 100. That means the cost, if this is 1,000, the cost is 4,000. Cost is 4,000. 4,000 plus 1,000 is 5,000. Tell me the answer for the second one. If the margin is 20% and the cost is 6,000, how much is the profit? Margin is 20%. If the cost is 6,000, how much is the profit? I need the profit, not the selling price or anything else. Profit. Write the equation. Cost plus profit equals selling price. Margin means sales is 100. Profit is 20. Cost is 80. Now the cost is 6,000. We need to write 6,000 under the cost. Now let's calculate 6,000 divide by 80 multiply by 20. So 6,000 divided by 4. 1,500. Profit is 1,500. Sales is 7,500. Right. Can you tell me the answer for the third one? No. Margin is 25, cost is 4,000. What is the profit? Number 3. What is the profit? Right. 1330. Okay, so margin is 25 means sales is 100, profit is 25, cost is 75. So if the cost is 4,000, how much is the profit? 4,000 is equal to 75. Divide by 75. Multiply by 25. 4,000 divided by 75. 1,333.3. 5,333.3. Right. We are moving to another one more question. Example 8. There are two questions. Can you all tell me the answer? Profit calculation. Example 8. Right. So let's check. So can you show the First one. Profit markup is 30%. Markup means on cost. Cost is 100, profit is 30, selling price is 150. Right? Then sales is 780,000. Calculate the profit and cost. So let's calculate the profit. How do you calculate the profit? 780,000, which is equals to 130 multiplied by 30. Right? And the answer is 180,000. Then if you want to calculate the cost, what you have to do is 780,000 is equals to 130. Divide by 130, multiply by 100. That means 600,000. So 600,000 into 30% is 180,000. 600. 600,000 into 30% is 180,000. So on cost, 30%. That is the answer for the second one. Tell me the answer for the second one. Profit margin is 33,103%. Right. So here, cost profit margin. Margin means sales. If sales is 100, profit is 33, 1 over 3. Cost is 66, 2 over 3. On sales. On sales. Now, when you have fractions or decimal values, it's difficult to solve. Therefore, what I can do is I'm going to divide all these values from the lowest number. I'm going to divide all these values from the lowest number from this. So lowest number is 33 1 over 3. So for 33 1 over 3, there is 1 33 1 over 3. 66 2 over 3 means there are 2 33 1 over 3. And 100 means there are 3. So this is the summarized equation. If the cost is 2, profit is 1, sales is 3. 1/3 of the sales is profit. 1/3 of the sales is profit. 33 1 over 3 divided by 100 means it's 1 over 3. Now the cost is 50,000. If the cost is 50,000, how much is the profit? If the cost is 50,000, you can see 50,000 is equals to 2. Divide by 2, multiply by 1, which is 25,000. Sales is 75. Is it clear for everyone? Now 100. Remember this equation. 33 1 over 3% means 33 1 over 3% means 33 1 over 3 over 100. This is 33 1 over 3. Okay, if you divide this, 1 3 1 over 3. If the profit is 1, sales is 3. Similarly, I'll take another example. 25%. 25% means 25 over 100. Or same thing, we can take 1 over 4. So if the profit is 1, sales is 4. Okay. Is it clear? Any doubts? Any other questions? Now let's move to some past paper questions. This question. Example 9. Actually a past paper question. Tell me the answer for this. Let me summarize the Question will be explained. Total assets as at 1st of April 560. Total liabilities 160. Right. Transactions took place during the year are as follows. Sales 240, including 33,103% on cost. Invoice price of return inward 60,000, including profit of 20% on selling price. Goods drawings of the owner 18,000. Additional capital invested 40,000. What was the balance in capital account as at 31st March 2015? So how do you calculate the closing capital? Closing capital is equals opening capital plus additional capital plus net profit minus drawings is the closing capital. In the statement of financial position, we have the capital plus net profit minus drawing. Capital means it's opening capital plus if there is any additional capital that will be added. So there is only sales and sales return. Profit is equals to income minus expenses. So here there is no expenses are given, right? You have a sales and a return inwards. So you can find out the profit in this sales and sales return. How much is opening capital? Tell me the opening capital. Opening capital. Let's do one by one. What is the opening capital? Opening capital means asset minus liabilities 1st of April. What is the opening capital? Difference between this, which is 400,000. 400,000. Right? So we can write opening capital is 400,000. Then we took these two information. Additional capital 40,000. Goods drawings of the owner 18,000. Additional capital is 40,000. Drawings is 18,000. Now we need the profit. Net profit. So there are only two transactions in this business. Can you tell me how much is the net profit? On cost 33,103 for the sales. So you can find out the profit on the sales, and there is a return inwards. You can deduct the profit on this return inwards. So the net is the net profit. Okay, can you all do this? Right. So first, let's calculate the sales. Now, on cost 33,103. If the cost is 100, profit is 33,103. Sales is 133,103. So since there are decimals and the fractions, we will divide all the values by 33,103. So here 1/3, and out of sales it's 1/4. Sales value is 240. That is the sales value. Selling price 240. On cost. How much is the profit? Tell me how much is the profit? Yes, it's 60,000. Right? Now you know how to calculate this. Can you all calculate the profit in the sales return? What is the profit in the sales return? Profit in the sales return. Invoice price of return invert system include a profit of 20% on selling price. So here selling price means sales is 100, profit is 20, cost is 80. So invoice price means selling price is 60,000. How much is the profit? Yes, it's 12,000. Now this is why we study margin and markup. If you don't know margin and markup, you can't do this question. Okay. Now the net profit means from sales, sales is 60 minus sales return 12,000. So net profit is 48,000. Net profit is 48,000. Okay, there are no other transaction, only a sales and a sales return is given. Sales value is given on cost. Return inwards is given on selling price. Opening capital plus additional capital plus net profit minus profits equals the closing capital. So how much is the closing capital? 400 and what's the closing capital? Yes, it's 470. 470. Good. Okay. Do the next question. Example 10. Can you do this? This is the previous question. If you want to take a screenshot, you can take it. This is example 10. Okay, so shall we start? This is an A-level past paper question. Vishwa started a trading business on 1st of January 2016, investing 1 million as capital. It's the opening capital. He spent 90% of this amount to purchase goods and sold them with a 30% markup on cost. Markup is on cost. The net asset of the business as at 31st March 2016 were 1.2 million, 1,200,000. This year month end of the month net asset. There was no additional capital introduced or drawings made during the period. So no additional capital, no drawings. Calculate the following for the period. What is the profit? What is the operating expenses? So first, let's calculate the profit. So how do we calculate the profit? We use the profit equation. Profit equals closing net assets minus opening net asset plus drawings minus additional capital. What is the profit? Tell me how much is the profit? So we need opening capital is 1 million. And the closing net asset 31st March 1.2 million. That's the closing net asset. No additional capital and no drawings. How much is the profit? It's very simple. 200,000. So closing net asset is 1.2 million. Opening is 1 million. No drawings, no additional. Therefore, profit equals the net profit. This is profit means this is net profit. Okay, net profit equals 200,000. Right. Now the net profit is 200,000. So we calculate the net profit by taking sales minus cost of sales equals gross profit minus operational expenses is net profit. Right? Now the question is, what is the operating expenses? What is the operating expenses? right? Can you all give a try to calculate the operating expense? One information that they have given, he spent 90% of this amount to purchase goods and sold them with 30% markup on cost. So we have to use this equation, this information, in order to find out the sales and the cost of sales. Cost of sales. What is the cost of sales? He is spending 90% of his investment. He is spending 90% of his investment as the cost, right? So cost is 900,000. Cost is 900,000. Markup is 30% on cost. So if the cost is 100, profit is 30, sales is 130. Right. So how much is the profit? 900 means profit is 270,170 is the sales. 1,170 is the sales. So sales is 1,170. You don't need sales, cost of sales and all. Anyway, we will record them. 270 is the gross profit. Gross profit is 270,000. Therefore, the operational expense is 70,000. Operational expense is 70,000. Right. Is it clear? I hope you all understood this question. This is a past paper. Right. Now let's move to example 11. (2015) paper. 2015. Sumudu has commenced a business on 1st of April 2014, investing 500,000 cash. During the year, Sumudu provided 200,000 worth photocopier for the business and withdrew 50,000 from the business as drawings. Business earned a profit of 120,000 during the year ending 31st March 2015. State I've given the answer. State two items with values that contribute to increase in equity. Increase in equity. Right. What is the answer? State two items with values that contribute to increase in equity of the business. What increases the equity? Right. So we can write two answers. One is investment of photocopier. The one is the profit earned. So those two transactions will increase the equity. Those two transactions will increase the equity. Then the second question, what is the net asset of the business as at 31st March 2019? Net asset means the capital, closing capital balance. There is a doubt. So can we include the capital 500,000 as well? Yes, you can include 500,000 investment of capital. It is also fine. Opening capital. Now let's calculate the net asset, closing net asset. Opening capital is 500,000. Additional capital is 200,000, which is the photocopy. Net profit is 120,000. And the drawings is, sorry, net profit is plus. Drawings is 50,000. Closing capital is how much? What is the closing capital? Closing capital is 770,000. So that's the answer for the closing capital. So I want you to do these remaining questions. I have sent these in the WhatsApp. So I want you to do all the remaining questions. So in the next session, I will explain. Right? And there are some other doubts I will clarify. Okay. Is it clear the profit margin markup calculations? Any doubts up to this point? So final summary is this. Remember this. Okay, remember this point. Markup means on cost. Cost is 100. Margin means on selling price. Selling price is 100. So based on this only, most of our questions will be based. Okay. So there is a doubt, but not related to this. I will conclude this part from example 11, right? So I want you all to do the remaining example questions. There are 26 questions. So the remaining you do as a homework. Okay. If you don't have any doubts, I will explain that on Friday. There are some other questions I will explain now. Right. There is one question. Goods sold on cash or return basis. Right. So that is not related to this. Anyway, I will explain that. Goods sold on cash, or we call it goods sold on sale or return basis. Right. So here what happens is there is a condition. This is an accounting adjustment. Right. So there is a condition where the supplier is giving goods. Normally this happens in a agent situation. Like let's say we have a furniture shop. And they have an agent. This shop is in Moratuva. They have an agent in Colombo. They sell 100,000 worth of furniture on the condition sale or return basis. On the condition sale or return basis. Right? So if it is sold in the Moratuva Furniture Company gives the stock to the agent, they will record this as sales. What is the double entry? Debtors account debit, sales account credit. Right? Now let's say out of this 30,000 stocks remaining, there is a closing stock of 30,000. So if there is a closing stock of 30,000, if there is a closing stock of 30,000, then the sales is not 100,000 because there is remaining stock. So out of this 100,000, we have to deduct 70,000. So this is not a sales return. This is, we have to reversal of sales. So if there is remaining stock 30,000, what to do is deduct from the sales account and deduct from the debtors account. It's not a sales return, it's a reversal of sales. So actually the data balance is 70, sales value is 70. This is called goods sold on sale or return basis. So remaining closing stock can be given to the or to a furniture shop. Sale or return basis. Is it clear? And there are some more questions. So then the supplier will provide time period. Yes, they will provide time period. Sometimes these small restaurant, hotels and all, these some people sell short eats like rolls, bread, buns, homemade items. So that will be given on sale or return basis. So after the end of the day, maybe after 8 o'clock, 9 o'clock, it will be returned to the supplier, sale or return. If it is sold, nothing to do, it was recorded as sales. But if there are return goods, that will be resent to the suppliers. Right. Then there is another doubt. So can you explain goods damaged and insurance claim? Yes, I will explain. Damaged goods and insurance claim. Now, damaged good means we have, let's say we have a stock. Cost is 100,000. This includes a damaged stock of 20,000. This is damaged. And the insurance company agreed to pay 80%. 80% means 16,000. So therefore, actual loss is only 4,000. Actual loss is only 4,000. Then I will give the double entry for this. Important thing is the double entry. So the damaged stock amount will be deducted from the cost of sales. From the purchases you will deduct. So purchases account credited 20,000. Purchases account will be credited 20,000 and insurance receivable account will be debited 16,000. Insurance receivable will be debited 16,000. Stock losses account, which is other expense, debit only 4,000. So this is the double entry. Right? The insurance receivable goes to the statement of financial position in current asset. Stock loss income statement under other expense. Purchases credit means in income statement minus from cost of sales. Minus from cost of sales. So this is how you record the damaged stock and insurance statement. For the income statement, other expenses only 4,000 will go. 16,000 is insurance receivable. Purchases account will be credited 20,000 as damaged stock. Any other questions? Okay. So we'll conclude from this point. On coming Thursday, I will do the depreciation, the PPE part, and Friday we'll continue this incomplete record. Okay, so good night and take care. God bless you.